Hey guys, John Paulamy here, Actionable Intelligence. Today's Saturday, July 27th, 2019, and this is the weekly market update. So, in this week's reality check headline from the Los Angeles Times this week, House approves 2-year deal to raise debt ceiling and increase government spending. So this is going to tie into what I'm going to talk about later on in the video on one of the or on the next slide. But with all of the kabuki theater going on around the Mueller testimony and all this nonsense, isn't it amazing that we can't seem to get anything done in this country at the federal level in our government? We have this polarization of these, Democrats and Republicans, and the Democrats want to impeach the president, and the president's, pounding on the Democrats about socialism, and all this kabuki theater, and all the country dividing like this is, an NFL championship game, my team against your team, I'm right and you're wrong. But what's really going on? As usual, the Stoops have it wrong, the shoe clerks, the bleacher bums, reacting emotionally. But if behind the scenes, here's what goes on. There's one thing that both parties can agree on, and that's to spend more money and go deeper in debt. So I'll put a link to the article, but you can read it. Basically, the House overwhelmingly, bipartisanly passed basically suspended the debt ceiling until after the next presidential election. So there is no debt ceiling now. There is no limit to how much debt the U.S. government can incur at the federal level. And of course, they increase spending on both defense and, social programs, whatever. And, there's no longer even any pretense. There used to be at least a few people in the House like Ron Paul or some of these other people that would come out and, talk about the evils of incurring more debt and how it can't, go on, blah, blah, blah. That's even been thrown overboard. There is no longer any more pretense about spending more money. The president's all on board. He was out praising this. Yes, this is terrific. We're going to strengthen the defense, blah, blah, blah. We have $23 trillion in debt. We have $100 trillion plus in federal Social Security and Medicare unfunded liabilities. We have pension crises all over at the state level, state employees, private pensions. We have all kinds of issues. We have an elderly population that thinks that all of these things they're entitled to, and they vote, and they're squabbling about the Mueller thing. And of course, they all agree, the sociopaths that they are, about incurring more debt. Nowhere else in society would this be acceptable. In your personal life, everyone listening to this, that includes the ankle biters that are inevitably going to come on the comments and turn this into a political screed by me or criticize me. Tell me in your personal life if you can run 100, 200, 300% of your income in debt and not have it affect your life. Tell me any of you business owners out there that any bank would allow you to run up your debt to 2, 3, 4 times your revenue. It's not going to happen in anywhere else except for this fantasy land that's government. And this is, things, just because things are certain doesn't mean they're imminent. There's been a lot of people throughout history. You can go back. I remember even in the 90s reading a book by some guy, I think his name was Figgy. He used to own Figgy International, some company. He wrote a book about debt, and people keep talking about it. And, the thing with debt and these financial crises is they're not a problem until they're a problem. And they come on very quickly. It's like, what's the last piece of hay or straw that you have to put on the camel before you break its back? What is the one? What number grain of sand is the one that you have to drop to create the collapse of the sandcastle? What is the what number or which snowflake is the one that hits the side of the mountain that creates the avalanche? You can never know, but you know that if you have an accumulation of snow in an avalanche area and it keeps getting bigger and bigger, previous experience will tell you and show you that eventually you're going to have an avalanche. Just like I said, just because something's certain doesn't mean it's imminent. It's certainly not good when, George Bush, the shrub, took the federal debt from 5 trillion to 10 trillion. It certainly wasn't good from that President Obama took the debt from 10 trillion to 20 trillion, and it's not going to end, regardless if they're all conspiring to do this, and this is not going to end well. Something is going on in the world, and the reason why I'm saying that is because gold is making all-time highs or recent new highs in almost every single currency. And I was just browsing this website the other day, goldprice.org. I'll put a link to it in the show notes. You can go there and you can look at the charts. You can look at the prices of gold in various currencies all over the world. I mean, just about every currency that's out there, whether it's, the Argentinian peso, the Turkish lira, the Canadian dollar, the euro, the Japanese yen, whatever currency you want to look at, gold is making either near-term recent highs or all-time highs in just about every currency, and is close to breaking out to a recent 5-year high in the dollar. So what is going on out there? And this kind of coincides, this breaking out of gold in all these currencies, with another, certainty or fact. And the fact is that debt is at all-time highs almost everywhere on this planet. I don't have time to go into how much debt has doubled or what the Chinese have done or what we've done since the financial crisis. A lot of debt has just been incurred. And like I said, it's not a problem. The sun's out right now. I'm sitting in my office looking out. The sky's blue. The sun is fine. The refrigerator's full. We got, everything's looking, up. Everything was fine yesterday. Everything's fine today. So recency bias tells most of the shoe clerks and most of the population that everything will be fine tomorrow. But is it? Why is gold making new highs in just about every currency on this planet? Is that an indication that all things are good? This debt issue is going to be solved, and it's going to be solved in one way. And we don't have to, really think hard about this because, as Solomon said, there's nothing new under the sun. Human nature doesn't change. You can Marcus Aurelius, Solomon, I'm sure you can find other thinkers throughout history that talked about human psychology and human nature. Human nature doesn't change, just times change. The stage doesn't change, the actors change. And so we can look at previous indebted societies or debt cycles, and we can figure out, we can kind of game this out about how this is going to be solved. Is the $23 trillion in U.S. debt going to be paid back? I mean, are you kidding me? I just told you that that there is no debt ceiling anymore. There's not going to be another discussion about the debt ceiling until after the next presidential election. Because, Trump is a real estate guy. Real estate's done with debt. He likes debt. He thinks it's not a problem. And certainly the sociopaths that are in the House and Senate, they like to spend your money and put you in debt to buy votes. That's what the game is. So they're certainly for it. So tell me about the debt being paid back. Are you insane? It's never going to happen. It's going to continue to grow. Another way you can get rid of debt is just default on it. That's what I think should happen. I think that we should announce a debt default tomorrow on all $23 trillion, for several reasons. First of all, it will teach all the people that loan money to this corrupt government a lesson that they shouldn't, give money to corrupt governments. And it's not just the U.S., it's all governments are corrupt. Secondly, it will get rid of the debt. Is it going to happen? No. We're not going to default on the debt. So what's your option? Well, it's what everybody else in history has done, and that's print money. I don't even want to call it money. That's why I like calling it currency units. Money actually is an exchange, a medium of exchange and a store of value. And these paper currencies that can be created out of nothing or electronically by the click of a computer screen at the Federal Reserve Bank is not money. They're currency units. And you accept them and you use them because you have confidence that they are a store of value and a medium of exchange. And that works fine. I'm not predicting a hyperinflation in the U.S. What I am predicting, though, is that the value of the dollar and these other paper currencies around the world are going to continue to lose value against real goods. They have to. The debts are too big. They will not be repaid. the promises and the obligations that these governments, especially in the Western Europe and the United States and basically all the OECD developed countries, are so large they cannot be paid out of real wealth creation. Greenspan talked about this many years ago. You can look up the exchanges that him and Ron Paul would have during Federal Reserve testimony in front of Congress, and Ron Paul would ask him these questions. He would ask about the unfunded Social Security and Medicare liabilities, and Greenspan was very frank about this. He said, as long as the United States can print dollars, the obligations will be paid. However, I cannot guarantee the value of those dollars that are being created. I mean, this is from the Federal Reserve Chairman. It's not me saying it. Look it up. So anybody that wants to, it's like I said, most people listening to this are saying, well, it's not really an issue. It's not an issue. Yeah, it's not an issue today. It wasn't an issue in Greece until, everything was fine one day. The next day, the banks were closed. You could take out €100 a week. Then it's a problem. It's not a problem until it's a problem in Weimar, Germany. Or it's not a problem until it's a problem in Venezuela. Or it's not a problem until it's a problem in Zimbabwe. I mean, the money printing got so bad in Zimbabwe that the value of the currency wasn't even high enough to pay for the ink to print additional bills. They basically undermined the currency so bad that it cannot be used for anything. It was more expensive to print the banknotes than they were worth. Now, am I suggesting it's going to happen in the U.S.? No. What I am suggesting is there's going to be continued inflation in money in currency unit creation to try to paper over these problems. And if you don't think that this is a problem, if you don't think this is an issue, explain to me why gold's going up in all currencies just about around the world. There's something going on. Is gold sniffing this out? Yes, I think it is. I think we're coming to something's getting ready to happen. I don't know what it is, but gold's telling us something. And I think gold's going a lot higher in my view. And I am starting to move into certain gold equities. I definitely hold bullion in secure locations, not at my house, but I have secure locations. And, that's what I suggest people do. You need to have some of your money or some of your wealth stored in these hard assets. And I think all commodities, I think what's going to happen is that, we're probably going to have some kind of crisis, or we're going to have a recession. And, we're already heading for recession. Look at the PMIs, look at the reports around the world. I mean, the world economy is decelerating. And, I've already put up a chart, and I'll put up another one. You can go to the Council for Foreign Relations, tracks interest rate cuts around the world. The whole world's in a massive rate cutting exercise right now. There's no central bank that's not cutting rates, or very few. So let's move on to uranium stocks. They got nuked this week. It's been amusing to kind of watch the Twitter and some of the messages I get from people. And, I guess this was an inevitable outcome of the disappointment around the fact that the 232, thing possibly didn't go the way some folks thought it was going to go. I think there was a lot of expectations that, Trump is pro-nuclear. Secretary Perry's been out there. The administration is definitely pro-nuclear power. And I think there was an expectation or a view that, the government, the Trump administration was going to do something to bolster the domestic uranium industry, mining industry. And that still may come. They have the working group. It's in process of looking at things. That may come. I don't know. But if you were buying uranium stocks because you thought that there was going to be a positive outcome to 232, then, I don't think you get why you should be in uranium stocks. You were speculating on one event. It didn't happen, and things sold off. I think there's another false expectation out there that, a lot of people have been talking about, this 232 thing has been hamstringing utilities from coming in and doing contracts. That very well may be the case. I'm not in contact with a lot of fuel buyers. I don't know. But that seems to be a lot of the other speculation or views. I don't discount that. It's very, very well could be the case. I do not know. But if people thought that, the next day after that, all the fuel buyers are going to be calling all the miners and saying, let's get some contracts going. I mean, these things take time. I mean, especially at these utilities, they're regulated utilities. I worked in a regulated utility, And it's like, any other bureaucracy. It's like working for the federal government. I mean, I used to work at Duke Energy. I mean, that's no different than working at the energy department in Washington, D.C. Believe me, nothing happens quickly over there. So I think that, we will see a recovery in uranium prices. I don't know when it's going to be. But, I wanted to kind of get into something here. People email me all the time, and, I monitor the uranium Twitterverse, if you will. And I get, I don't know what I'm supposed to do. I'm not really a priest. I'm not a psychiatrist. I really can't, tell people are just, one person emailed me and said, well, from a video I made like over a year ago, the uranium price is basically where it was when you made this video. And what's the problem? I don't get how some people's minds work. These things, when you're in these blown out, battered down industries or sectors, you don't know when the turn's going to come, if it comes at all. I kind of go back to the poker analogy. I mean, people that really want to be, I think, buying their own individual stocks or speculating in these markets really should understand game theory, really should take up poker. And I'm not talking about playing on some free website where everybody plays every hand. I'm talking about with real money where it really affects you and you have to make real decisions and calculations. And the reason why I'm saying that is because that's what we're doing here. We're taking information in, we are analyzing it, we are making a deduction, and we are calculating the probability of a future event happening. And we are hopeful or thinking that our information and our deductive capacity is better than the markets in identifying an undervalued situation. Now, that doesn't mean that we're correct. All we're trying to do is put the odds in our favor, and then we push our chips in. When we think that we're in a situation that is to our favor and has the possibility for outsized returns. And that's the situation in uranium mining. I mean, I kind of have to keep going back to Marcelo Lopez at L2 Investments. He's got this 4 questions you really need to ask yourself. But first, I want to steal a quote from Ray Dalio, who wrote a article on LinkedIn, which I'll put a link to, and it was called Paradigm Shifts. And I like this quote: identify the paradigm you're in, examine if and how it is unsustainable, and visualize how the paradigm shift will transpire when that which is unsustainable stops. So what is the paradigm we're in? We are in a paradigm of multi-year, super low, bombed out uranium prices. Uranium prices that are below the cost of production of just about every uranium miner in the world. That's the paradigm we're in. To add to that paradigm, we are in a world where energy demand is going to constantly increase. I've pointed that out. If you don't understand that, go look at the BP review, energy review, annual energy review from a couple videos ago. Okay? Go on Google and type in BP energy review and look up the history. Look, all the charts are there. The graph starts on the lower left and moves to the upper right. Yes, when there's occasional situations like 2008, there's a slight dip. But in the end, energy demand continues to increase, and it will continue to increase forever. So, where are you going to get this energy? Where are you going to, without killing your population by, flooding the atmosphere with, smog in China? Well, nuclear power. And that's why this build-out is happening. You have 50 some odd, 53, 54 reactors under construction around the world. There's more reactors operating now, more capacity and upgrades, on plants. There's more nuclear production capacity, electrical production capacity than there was before the Fukushima accident. And it's going to continue to increase. It's not going to go away. As a matter of fact, the Chinese, there's an article, I'll put the link to it. They just authorized starting more new rebuilds. There was a hiatus for a while, and the reason, they've actually started the construction now on those new reactors. 6 to 8 a year. India building more reactors, Russia building more reactors, UAE building reactors, more countries going to nuclear. Okay, that's the paradigm. So let's go through what Marcelo Lopez. Ask yourself these 4 questions after last week's drop. Is demand for uranium increasing? Yes. More reactors are being built. We know this. Go on the WNA site and they have a tab on there, new nuclear. They put all the news on there for all the new nuclear plants that are coming online. You can track it in real time. They make announcements whenever a reactor starts up, whenever it gets commissioned, whenever the first, pour is done. I mean, Hinkley just got done pouring their initial concrete. That's over in the UK. I mean, it's happening. It's not speculation. These are facts. Is the supply of uranium increasing? No. Who's going to build, if the average production cost is, $40, $50, $60 a pound, whatever, depending if you're doing hard rock mining or ISL, and you can get $25 or $32 or whatever the term price is, or $25 with the spot price, who is going to invest $1 billion or $500 million or whatever the cost is into a uranium mine to get a negative return? No one is going to do that. So what you're doing is you are in an industry that's self-liquidating. You are living off the investments made a decade, 2, 3 decades ago, or during the last booms. That's what you're living off of. It's like an orchard. I'm involved in, almond farming. You have to constantly replace the trees. They mature after, 6, 7, 8 years. They start producing fruit. They produce fruit for 20 years, and then they start not producing fruit. So you got to cull them and build new ones. I keep talking about this over and over. And just because, it's like the people can't get over a psychological block they have. These are facts. These 2 initial points are facts. And yet people are like, well, why isn't the price going up? Because the market doesn't give a crap what you want or when you want it to happen. The reason that the price hasn't increased is because no serious money has come into this sector. This is a tiny sector market cap-wise. $10 billion or something like that? I don't even know. It's under $10 billion. I mean, that's nothing when you've got, companies that are worth $100, $200 billion, $400 billion. What's Apple worth? $500 billion or more? I don't even know. Amazon? Who cares about uranium? No big money can come into this. And no big money's going to come into this until the price of uranium, fuel, or whatever starts going up. And then capital will come in. Capital's going, then it'll start popping up on the algo screens. Wow. Uranium's moving higher, UPC's moving higher, Cameco will start moving higher. It'll start getting picked up by the algos. It'll start getting picked up by analysts. And then, more money will start coming in. That's how these things develop, but they take time. And nothing's happening. There's no news. So what do you expect? And then, after this 232 thing, people, I think, had, set themselves up with some higher expectations. And boom, look what you got. Look at the price of Cameco. So what I don't understand is if you liked it at 10 or 11 bucks a share, and now it's at 9.22 a share, why aren't you buying more? If you understand that demand for uranium is increasing and the supply is not increasing. Let's go on to the other 2 points that L2 Capital talks about that I think you need to focus on. Is the current price of uranium sufficient to bring on new supply? No. I just explained that. People say, well, the Kazakhs could expand production, by 5 or 6, 7. Who cares? 190, 200 million pounds a year in demand, and the Kazakhs are going to supply all this? It's not going to happen. You're running off the existing supply. Contracts are running off. Every month, contracts, every year, contracts are running off. And the utilities are not signing any, have not been out there signing new contracts at higher prices. It's inevitably going to come. Is the price of uranium high enough to dissuade utilities from purchasing? No. I mean, they should be out there purchasing, but they're bureaucracies. So, and they're like everybody else, like the rest of the shoe clerks. When something's cheap, they don't go out and buy it. They think that there's a problem or they think it's going to stay low forever. They have recency bias also. the things that affect all of us as investors also affect, these fuel buyers. So I think part of the problem here is, because I'm not going to get into a psychological analysis, everybody's different. Everybody has different risk tolerances. Everybody has different views on, these things. Everybody's investment journey is the same. But I go back to what successful people that invest capital do. And what they do is what Ray Dalio says. They identify a paradigm, they examine if it's unsustainable, and then they figure out, once the shift comes, what's going to happen. And eventually, as the supply decreases and the demand increases, eventually the price is going to go higher. This is inevitable. So I think what people need to do is really reset their expectations. I mean, guys, if you invest in an S&P index fund and reinvest the dividends over 30 or 40 years, you're probably looking at an average return of 8 to 9% a year, 7, 8, 9% a year, something in that range, okay, depending on the time frame you want to look at. So if you just take money, put $288 a month in your 401k and your Vanguard S&P index fund over the next, if you had done that over the last 20, 30, 40 years, you'd have averaged 8% a year with dividends reinvested, capital gains reinvested, okay? And you would have accumulated a good, tidy sum of money. 8% a year, average. Some years you'd have been up 50%. Some years you'd have been down 20 or 30%. You would have had a big drawdown in 2008 and in 2000, 50, 40, 50%. But then you would have recovered. If you average it all out, you would have had about an 8% return. Okay, that's doing nothing. That's just automatically sending Vanguard your money with they have low fees, investing in S&P. If you look at the returns, which you can go on the Berkshire Hathaway website, open up any of the annual reports that they do, and the first thing they have is their average return. Prem Watson does the same thing, and you look at the average return, you'll see something like, I think it's like 16.5% averaged over the last 40 years. 16 for the best investor in the world, something like 16% average annualized return, averaging in all of the ups and downs. So that's the best investor in the world, 16% a year. So we have people emailing me going, well, the uranium price, let me tell you what's going to happen. If the thesis is correct, and we look at previous times that this has been correct, where demand is going to go up, supply is going to go down, when I have been involved in these types of commodity markets and they shift and they start moving higher, and if you are in the right companies, you will have 100, 200, 300, 1,000%, 2,000, 5,000% possible increases. And it will happen very quickly. Look at some of the stock returns of some of the companies in the last uranium bull market. Look at some of the companies that went up during the gold bull market that went on from 2000 to 2011, the initial thrust. There were many companies that I had bought that went up several 100%. So if it takes 2, 3, 4 years for the uranium market to turn, and you are in the right companies, and even if you're in Cameco, look at what Cameco did during the last run in bull market. It was up 400 or 500%. So you can't sit on your leather ass and grind it out for 3 years for a 400% return when the best investor in the world is averaging 16%, and that investing just in the S&P index would have got you 8%. I think the problem here is not, the analysis. I think the problem is the wrong expectations quite a few people have. And let me just reiterate this one point. The market doesn't care what you want, and it doesn't care when you want it. That's what's so frustrating about markets. That's why this is actually hard, because most people can't grind it out on their leather ass and just wait. That's what playing poker will teach you. If you play correctly, you're going to lay down most of your hands. Go on some of these poker free websites where people play with free money, and they'll play every single hand. That's not how you play poker for a profit. Even when I used to be able to play before the U.S. government stopped us, there were people that were playing with real money that would play totally out of position, totally every hand, because they wanted a dopamine hit. They were gambling. They had no clue what they were doing. And sometimes I have to sit there and fold 20, 25 hands in a row until I get the right hand sitting in the right spot, and that's when I got my money in. And I consistently made money. But it's not fun to just sit there. There's no dopamine hit. You're grinding it out. You have to sit and wait. That is the hardest part. Jesse Livermore said that. The hardest part of making money was just sitting there waiting. So I think, take a look at your expectations. Take a look at, what's really available to you. I mean, what are you going to do? Keep your money in a passbook savings account and get 0.1% interest from Wells Fargo? I mean, you have to be in something. The Federal Reserve has forced everyone to become speculators, and we're going to see more of this. So, I think the setup is perfect, and it's like Marcelo Lopez said, we've already won. We just have to wait for the payoff. I don't know when that's going to be. Can I wait 3 years? Yeah, because I've had 1,000 and 2,000% returns on stocks before, and I've had to wait. My biggest return that I ever had was Hurricane Hydrocarbons. It was over a period of 3 to 5 years. It went from, 2 bits or 25 cents up to, ended up going to $50 a share. So, I mean, that's the game. And if you can't do it, you're just not going to be successful. So, encourage you to take a look at this and think about it. I mean, take a walk. Think about this. What are your expectations? What are you trying to get out of this? What are you comfortable with risk-wise? So that's what you need to think about. And I can't answer that question for you. That's an individual question on your individual journey. So you know more about yourself than I do. I'll never know what goes on inside your head or in your stomach, when you see these companies dropping. And I know people want to know what's going to happen. They're reaching somebody, give me some affirmation or give me some comfort. That's not how this works. You either get it or you don't get it. You either are comfortable and understand the thesis, or you're just in there gambling. So that's all I can say about it. So hope you got something out of this week, and we'll be looking to talk to you next week. Thanks.